But yeah, basically first thing you got going on here is you do have some type of resistance formed here. All right, so there's this area right here on price, right? So as you can see, this is the monthly time frame. You obviously tapped into the resistance. Some of you guys probably know what the hell, or my bad, my apologies. Some of you guys probably know what I'm trying to say here, because this is the same analysis that we've had every day since the 1st of November. It's a monthly time frame, so of course we'll have the same analysis, right? But if that's your monthly resistance, right, your monthly support is, I'll say, somewhere in these ranges here, right? Why? Because if you guys take a look at the charts here, you're going to notice that that was your resistance where price bounced off of. And if you were to come down at any given point this month or over the next couple of months, you would be able to drop down towards the next support. And in that case, it'll take you down here towards 90 or 1800, where level is this? Like 1790-ish, right? But yeah, this is one massive range, and this is the range you're currently in. Now, this doesn't mean that price is going to drive down, tap into this range. It doesn't mean that price is going to drive up. It just means that we are simply in the range. So all we're doing right now is we're just simplifying the ranges we're in to make things simpler for us, right? So if that's the range we're in, we understand that. The question now becomes, how could we play this range? So that's what we're trying to figure out. What are the possibilities that could happen in this range, right? What are the scenarios? So there's a couple of scenarios. Obviously, it's not good enough to just draw out one scenario. It's good to draw out as many scenarios as you possibly can, but make sure when you draw out your scenarios, these scenarios are matching up with your playbook. So what I mean by playbook is, I mean trades that you've been tested and sample size for a long period of time, right? So I don't know how what that is to you, but whatever you decide that to be, make sure when you draw out your scenarios, they're scenarios that were part of your playbook and you've tested and sample size in the past before. And if you're still sample sizing as we speak, that's okay. Continue to sample size those trade setups, right? But you want to make sure you plan out your scenarios that are in your playbook, because you don't want to, the last thing you want to do is just sit in this range and guess and predict what price could do, right? When we're planning out these scenarios on price, whenever you see me draw these counts, like for instance, like if I were to have a scenario on gold here on the monthly, I'll say, okay, cool. So scenario number one could be, you know, price creates a bottom wick and then flips bullish to drive up towards the top of the range. Scenario number one, pretty straightforward, right? You close bullish, bottom wick to drive up. Scenario number two, great. You come up, you create a top wick, and then you flip bearish to drive down because you need liquidity to drive down towards the bottom of the range, right? So those are like my potential scenarios, obviously. Or scenario number three, I'll say, could also be, you know, price maybe ends up finishing on the monthly being bearish, right? Or being doji, something like this, while looking like this. You know, that could also happen as well. But yeah, those are my three options there. So all those three options were part of my playbook, right? You guys know that by now. If you've seen the playbook, or if you've seen the way I trade, right? You guys know that these are things that I look for. So all you're trying to do now is anticipate throughout the month, looking at the weekly, daily, 4, and the rest of the time frames, trying to figure out what's coming up next and what could print you that next push, right? So right now, obviously, we're halfway into the month, 17 days. You have a huge major folder on Wednesday, I think, right? Or is it Tuesday? It's Wednesday. Wednesday, you have a bunch of folders, right? So no, tomorrow and Tuesday and Wednesday, my bad. Yeah, tomorrow you have CPI, and then Wednesday you have core PPI. So tomorrow and Wednesday are pretty wild. So let's see how that turns out for price. Let's drop down to the weekly and take a look. I believe Friday we finished off pretty bearish, back into the range again. We're still missing that top wick, right? The monthly doesn't have a top wick yet, and I would assume that if price were to drop down, you'd be able to create a top wick, because that's a level of decision which lines us up within this range here in the middle of these wicks here, right? So you have a lot of rejections to the left here, a lot of rejections here, but obviously the average rejection area would be here between these wicks up here and also these wicks down here, right? So I'll say that red line going across would be the average area. I would assume you'd be able to come up, create a top wick, balancing to those ranges before making that move down, if you were to even come down this month, right? But I would assume that would happen first. So if that can happen, you drop down to the weekly, you're gonna notice the weekly is in the range and you're starting to break out, which is good. It's not a bad thing at all. But the only bad thing about this is that you have no top wick yet. So you can probably see and notice here that you have some type of resistance to the left over here, right? You have some type of support to the left over here at what level is this? This is 1945, right? You have a support there being formed, and I'll say since you closed below, I would assume you have range to come down, right? Look left, look at all the times where you closed below the range, what happened. So looking left, you're looking at these areas to the left, this area to the left, you closed below, you drove down, right? Looking at this, closed below, what happened? You drove down, right? This close respecting, you drove down. But yeah, like looking left, every time you close below, I'll say you drove down towards that minor support. So what's the average rejection area that you bounced off of here? So let's take a look. I'll go ahead and take this tool. I'll circle up the areas of rejection. So maybe there, maybe here, maybe here. I'll say, yeah, maybe these areas to the left. So I'll say it would be around here, right? That's where I'll look for my targets if you were to drive down today. So looking left, I've also noticed that when you close below the range, you didn't really create that steep of a wick, which makes me think, because this is a weekly, right? So can the weekly drive down towards 1900 first, or will it come up to create a top wick first? Because my concern again was the fact that you have no top wick here on these candles. So I was looking to see if this is the range you're in, from that green zone to this green zone here, right? That was your resistance, that was your support. You broke out that range, right? But that was your previous range you were in. I was trying to see if for some given reason this can happen this week, where you come up and then you create a top wick to drive down. That would be perfect, because that would give you enough room to clear out this entire range down towards 1840. But if you do not create a top wick first, tap in 2020, then I'll say you do have room to come down towards 1900, but 1910, but that's it. I wouldn't assume we'll come down all the way down towards 1820 unless you grab more liquidity, because you need a lot of liquidity for that to happen. You need a lot of volume, you need a lot of ranges, you need a strong catalyst, right? So that requires a lot of volume. And I'll assume that you'll see a top wick before making that push down towards the red zone. But to make the push down towards the yellow zone, I'll say that should be pretty solid this week, due to the fact that you didn't really need that much of a top wick to drive down the pass, right? You're gonna see, looking left here, you're gonna see every time you drove down. So let me go ahead and make this a little clearer for you guys. I'll say every time you close below that red zone, you were able to drive down towards the yellow, this next red zone. But the areas of the top wicks were like here, and then maybe like barely top wicks to come down, you know what I mean? So yeah, I wouldn't expect much. If this is a top wick, then I guess that's it for the daily, or weekly. So let's drop down to daily and see what's going on. I think the daily also is bearish as well. Yeah, daily looks like it is bearish. So it looks like the daily also closed below the range, which is good. You have some type of resistance to the left here. Let me go ahead and use this tool instead. But you have some type of resistance to the left here, and it looks like, yeah, it looks like you closed below 1942, and looking left, you do have range to come down towards the next support now, which sits you at 1913. So that's your next area of interest, right? So from 1943 to 1913, I'll say you have clean range coming down until then. Now be very mindful of certain levels here to the left. I'll say be very mindful of this area to the left here at 1920. There's no bottom wick on the daily there. So if you were to drive down, I'll assume you have some type of rejection within these areas here. Now that doesn't mean you buy. It just means if you were looking for sells, you want to be very cautious at those areas, because at any given point that area could reject. So if I were to see price today, I'll assume today you'll be able to drive down pretty straightforward sells to come down towards the next support. Now I asked you guys earlier, today before the analysis, what you guys think may happen on the small time frame, because now it starts to click a little bit, right? You see how like everything's bearish, you don't need that much of a top wick, you're already coming down today. You drop down to the small time from here. Let me go ahead and see the 4 real quick. Yeah, 4 is bearish too. Great, cool. The only thing I'll say maybe is you might need a top wick here. So take a look at this, right? If this is your range to the left here, you have this support here, you have this resistance here. If you were to create a top wick, where would it be? I'll say it's safe to say it'll be around these areas to the left here at 1944. So if you end up coming up today towards 1944, we're looking for sells down. You know why? I'll drop down to a small time frame in a second here, and you guys are gonna see what I mean. It's gonna be a range 1 fake out, going back to our old playbook, right? So this is a 4. If you were to drop down today towards the next support, which is here, I believe you need more liquidity, and more liquidity requires you to create a top wick, which in this case is gonna be 1944. So if you can come up like this, tap 44, flip bearish, perfect. This is what you're gonna see. And as you see this happening on a higher time frame, pay attention here. As you see that top wick forming, you're breaking all the highs. Pay attention to 1944 on a small time frame. So let's go down to 30, 15 and stuff and see what's going on. But, or even the 1 hour, to be honest. But you're gonna see, right? Look, the 1 hour time frame is in one massive range here. That's your resistance to the left there. So let's go ahead and mark that up. And it's pretty straightforward, right? Pretty straightforward. And then you have a support formed over here to the left in these ranges here at 1935. Again, pretty straightforward. Just some type of support being formed. Let me see if it's a little lower. Maybe it is a little lower. You know what? That might be fine. That can't be it, right? That can't be it. Yeah, that might be fine here. That should be pretty good. Yeah, so this is your support. So if that's your resistance, this is your support. This is the range you're in from 1940 to 1934. Now, I'll say looking left, right? If you were to come up and create a top wick, let's see where that would be. So let's take a look. Maybe use the 1 hour, but I'll say a top wick area would be anywhere in this range here. 44, 45-ish. I'll say 44.5 would be great. Right there. So again, if price today were to come up and tap 44, right? It would just be on a higher time frame. What would happen? It would look like this. It would look like one top wick just to drive down towards the bottom of the range. That's what it would look like, right? But on the smaller time frame, you might see some closures. So on a smaller time frame, you might see something like this happening. On the 30, for instance, you might see, or the 15, you might see something like this. You might see a bullish candle, right? Something like this, and all of a sudden you get a candle coming back into the range like this. I would not be surprised, right? But your entrance areas today would be around 1944.562 to drive down towards the bottom of the range, which is 1934, and then eventually you have runners coming down towards the next support. Because if you were to grab liquidity up at 44 just to flip bearish on a daily or on a 4, there's no reason not to drive further. And your next support to the left looking like it's going to be, I'll say, within this range here. Where's the daily no bottom wick area? I think it's gonna be, yeah, 1922, 1928. Okay, within that range there, I'll say. So yeah, I'll say your next support after you create that push up would be around this area to the left here. I'll say 1924 is pretty decent. Between 26 and 24, you probably have a clean range coming down towards. All right, so yeah, that's what I got going on today, chat. So if I'm looking for positions today, I'll look for sells likely to be at 1944.500, 1944.5, potential sells here away from my call. Cool. And then targets would be in the areas of 1920. Where is this? 1926, 28-ish. Targets doesn't really matter here, to be honest, but because like this is your range you're looking to grab, right? You're looking to grab whatever this is down towards the support, right? But yeah, that's the only way I can grab sells today. Obviously, if you just break out the range below 34, sure, maybe if you grab liquidity up at 40, I'll look for sells. But for that to happen, I likely would like to see a closure below the range like this, and then a top wick just to drive down, and it'll have to look something like that, right? But that's gonna take a long time to form because you need to close below and then you need to come up, create a top wick, right? I rather prefer we can just create a top wick now to get the push down late and why. But I would say positions may not come until 9 a.m. today, chat. Looking at the way things look. But yeah, I think that's about it for the day. If I'm looking for sells, it's a top wick towards 44.562 just to drive down towards the bottom of the range. Potential runners towards 1926. Yeah, just top wick entries, I'll say. I wouldn't really take breakouts today because you have a very high chance if you take the sells at 44. Worst case, you don't drive down, you're gonna retest the lows, right? So worst case, this happens anyways. You come up, you reject, you close above. You don't reject off of 44, but you'll likely get a bottom wick or something formed, right? Which will then let you get out the trade. But yeah, anything above 40 might be a range one fake out, so just be a bit cautious if you are looking for buys above 44. But if we don't get a top wick towards 44, then I can't really look for sells down towards 26 just yet, because I highly believe you'll likely need liquidity to drop down that steep towards the bottom of the range, right? But yeah, that's it, chat. That's what I got going on today on gold. So I guess we just wait for price to print and form, and then we'll look for positions right afterwards. All right.